Interest rates are now over 5% and home prices keep rising. So what does that mean to you if you're a buyer, and what does that mean to you if you're looking to sell? Hi, Frank DiTomaso here, and welcome to my housing market update. In this update, I'm going to share with you what to expect throughout 2022 to give you a better understanding of what's going on. To get started, let's talk about what the experts are saying about interest rates for this year. According to Len Kiefer, Deputy Chief Economist at Freddie Mac, mortgage rates are likely to continue to move higher throughout the balance of 2022, although the pace of rate increases is likely to moderate. Much of the increase in rates in early 2022 is in anticipation of what will happen later this year, especially with the Federal Reserve interest rate policy. So in other words, rates will continue to go up, but not at the pace as the first 4 months of this year. So basically, the mortgage rates are priced in based on what the Fed said they're going to do the rest of this year. So here's the question. What will this mean to the housing market in the rising interest rate environment? Here's something interesting. Going back to the 1990s, as interest rates were rising, just like they are now, home prices actually appreciated. If you take a look at this chart, you can see how prices appreciated at an average of 8% over that period of time. The reason for this is because people who are indecisive quickly feel the need to get off the fence. So that's the reason why prices rise. It sort of goes against the grain of conventional thought. You would think that if interest rates rise, then prices should fall. That's not the case. Another question people are asking is if we are in a serious bubble, being that prices have appreciated so much. What comes back to memory for a lot of people was the market of 2006, 7, and 8 and how that bubble burst. But there's a big difference between that market back then and the market that we're currently in. There were two reasons for that market crash. One was relaxed lending standards, and the other was the fact that people were using their homes like ATMs. They were taking huge lines of credit and spending it on fancy lifestyles, thinking it'll never end. This slide demonstrates the lending standards and the product risk back in the early 2000s. The red area shows how risky the products were back then. If you look at recent years, you can see that the red area is virtually gone, demonstrating that there is virtually no product risk. If you look at this next chart, it shows how much mortgage payments increased back in 2006. When homeowners took equity from their homes, it increased their mortgages tremendously. And in 2006, it actually increased the average mortgage payment to $4,930. If you look to the right of the chart, at years 2020 and 2021, you can see that mortgage payments have only increased on average $66 and $34 respectively. That's because the housing crisis of 2006 taught us a lesson, and people just don't want to do that again. The next slide sums it up. The national loan to value in quarter 4 of 2021 was at 30.8%, the lowest in over 3 decades. In inflation-adjusted terms, homeowners in quarter 4 of 2021 had an average of $307,000 in equity, a historic high. The last question is what's going to happen to home prices? If you look at this slide, you can see that there are different forecasts, but the average for this year is a 9% increase. So when people wonder if they're going to lose value in their homes, there are no experts calling for anywhere near that. Here's a chart showing the forecast of appreciation from 2022 to 2027. Assuming you purchased a house for $360,000, it would appreciate to $456,342 by 2027. That's a $96,342 increase in equity. Another factor to consider are the millennials, which make up the age group of 22 to 42. This group represents 45 million that are looking to purchase homes. This massive amount will keep demand strong and is another factor that will continue to drive prices upward. So the bottom line is this. Even though interest rates are rising, but expected to slow down as the year moves on, prices will continue to rise, and they're expected to do so for the next several years. This is also supported by the presence of strong millennial demand that keeps driving the market. So if you're a buyer who's concerned about buying at the top of the market, homes will keep appreciating in value for the next several years. So now may be the best time to buy. And if you're a seller, home prices are expected to continue to rise, but more inventory is expected to be added this year, and that could create more competition for you. So now may be the best time for you to sell. I hope this gives you a better understanding of the housing market, and thanks for watching. If you have any real estate needs such as buying or selling, please contact any of our professionals at either our Staten Island or New Jersey offices, or visit us on the web at dtomaso.com.